Hello and welcome to Car Dealer Live. My name is James Batchelor and thank you very much for joining us for these live broadcasts on the Car Dealer Magazine channel. Now, today on the show, we're going to be talking about new and used cars with Auto Trader, and joining us is the firm's commercial director, Ian Plummer. Hello, Ian.
Hi there, James.
Very well, thank you. Lovely to have you on as ever. Let's just get cracking then, really. So, what have you been seeing in the marketplace at the moment? What has demand been like, and how has it tracked since forecourts reopened? And also, I mean, how long is it going to continue?
There's quite a few questions in
I
there,
know.
James. There's quite a few golden nugget type answers we'd be looking for, I think, all of us. Firstly, the good news is that demand is tracking very strongly. I think a lot of people expected demand to be sort of focused on a pent-up demand that would be sort of fizzling out by now. As the lockdown ended, people would buy cars and then that sort of pent-up demand would peter away. What we're seeing actually is even a slight strengthening of demand. We've got a level of audience on Auto Trader which is actually rising slightly at the moment to around 30% up year on year. And we've seen stronger numbers than prior year since before the end of lockdown, and it's continued at sort of 25, 30% throughout most of the period. But we're not seeing any tailing off of the headline amount of consumers that are actually coming to the site. We saw more than 10 million unique users come to Auto Trader in July. It's in record numbers, 64 million visits. With roughly 3/4 of the time spent on site in the UK spent on Auto Trader. I think we're a good bellwether for the UK car market, and the fact that there are lots of people actually still looking for cars as we speak today, and it isn't just a question of pent-up demand.
Yeah. And I mean, you would assume that, at this point we're out of lockdowns, life is getting back to normal, and it has gone back to normal for lots of people in the motor trade. You would think that demand would have started to soften a little bit. So what you're saying there is actually quite surprising, isn't it?
Yeah, I think the demand we're seeing is exceptionally strong, and as we said, it is sustainable at this point. And a lot of people have expected it to drop off, and I think it would still be today talking about, well, will it last? Is it going to fall over after September? Given that it's perhaps surprising people, but it is resolutely sort of sustaining itself right now, there's no reason to start second guessing things and assuming that it's going to fall away. Now, we all are conscious that everyone's talking about October and the fact that furlough will end and there will be people made redundant, and that will dent consumer confidence, reduce household expenditure and so on. And no doubt that is going to be true for a large and unfortunate number of people. But even in those situations, as we saw in the last financial crisis, many people still will need a car. We know that there's people fleeing public transport. We'll come back to that maybe in a moment. But therefore, there'll probably be more of a case of maybe downgrading and getting a slightly smaller, slightly cheaper car rather than having no car at all. That still means there's a transaction in the market, whether it's a new or used model. And equally, there are at the other end of the scale, people who are actually retaining more of their earnings in terms of disposable income right now, because their avenues for spending money elsewhere, as we know, are curtailed. We used to be thinking of going on holiday. Some did, some didn't, but we probably spent less money there. Discretionary purchases have fallen. So cars are seen as a great opportunity, therefore, for many consumers to treat themselves a little bit. And if you're also thinking of the personal space aspect of where you feel safe, your own home, but equally your own car, then it's probably a safe bet to assume that those of us who are lucky enough, hopefully, to maintain a level of disposable income going forward will probably see cars as a good outlet for treating ourselves, our families, and so on. And lastly, just that public transport point. We're seeing clearly a lot of people who are saying that they are planning on buying a car, already have done even, to avoid taking public transport. Offices are reopening, and the government and employers like ourselves, we're encouraging our teams to come back to work. But cars, bikes, other forms of transport too will be preferred, I'm sure, by many people over public transport. And more than half of those people using public transport today who have a license say that they're now planning on buying a car to replace the use of a train or a bus. So all added together, there are a considerable amount of people looking to buy a car right now, and there's absolutely no reason to assume that that's going to fall away completely post the end of this quarter, let's say.
Yeah. But if we look at the new car market, we know that it's been improving for the last couple of months. all eyes are on September, but quarter four, the latter part of the year, is going to be very interesting, isn't it? And we've got to keep this, we've got to maintain this air of positivity, but there are some concerns that it may not be, as strong as it could be.
There are plenty of reasons to be optimistic. You're right, first of all, about September. The growth rate on new cars has been strong. June saw some much healthier numbers than obviously those we were seeing when the market was closed. Some of that was delivery of cars that were ordered prior to lockdown. But equally, we know the new car market takes a little while to sort of get going compared to used cars, which are more readily available and delivered quicker. So it was quite natural, I think, that we saw a growth only in July and not straight away in June. By growth, I mean obviously a year-on-year increase. I think August is likely to see a similar number, although it's a small volume, obviously, for reasons we know. September, from all accounts at the moment, is also looking likely to be ahead of prior year. So again, that means we will have had a really strong quarter. And a lot of retailers are thinking, brands are thinking, I've got to make sure I have a great September, finish Q3 really well, because who knows what will happen in Q4. But I would suggest that Q4 would also see the return of another area of sort of positivity, which would be that many brands have been selling through the stock that they've had available from prior lockdown, or that was in the pipeline, various stages of production and logistics prior to lockdown. And the stock mix isn't necessarily ideal just now in many cases, and sometimes it's very short in terms of overall volume. But production will have ramped up again, and in Q4 you will see some better levels of supply. So I do think that, assuming that the manufacturers are able to produce enough of the right cars and incentivize their retailers, they're still able today to incentivize the consumers because the interest rates are very low. Their values, will come on perhaps to values in a minute, are still very strong. So the monthly payments they're putting on cars at the moment are very attractive. And so long as we're able to attract consumers into the new car market, I think we've got plenty of reasons to believe that Q4 could be okay too.
And it's quite interesting, really, isn't it? Because there's been lots of chatter about incentivizing the new car market, and really, from a manufacturer's point of view, they're trying to hold off on that because they're trying to get through trying to go through the demand that they've got at the moment, really. So it's going to be interesting to see how it plays out later this year. It's one that we're all going to be keeping our eyes on, obviously. Let's just look at the used car market at the moment, and the pricing that you've observed. How has it tracked over lockdown? And have there been any big surprises and any things that have made you, raise your eyebrows a little bit?
Well, I think it's tracked, first of all, to your initial point, extremely positively. As for surprises, frankly, no, I would say, as a simple answer. Not to us, but I think to those who aren't following the data, perhaps so. By that, I would just suggest that the savvy retailers out there are following the data, and they know that actually the prices that we're talking about, that we see in the market, that we really do believe are the fundamental level of truth, is based on a huge volume of data. They are the prices that reflect the reality of what retailers are actually doing right now. It's the prices that they're putting on their cars and the prices they're buying cars out at auctions and so on. So that is the reality. It isn't based on a level of opinion and sort of a projection about what may or may not happen in the market based on other variables, macroeconomic or microeconomic and so on. Keeping it simple, basically we saw prices very stable during lockdown. People didn't sort of rush to reprice thinking that the bottom had fallen out of the world, although clearly, for many of us in many ways it had. But we paused the market in terms of demand. And I think the market paused in terms of supply, and everyone paused equally, therefore, their pricing. The balancing act was there, wasn't it? Nothing going on in either direction. When people started to prepare for a reopening, there was a slight shift upwards of prices. We saw April go up like 0.1%, May grow slightly more strongly at 1.9%. These are like-for-like pricing we're talking about compared to prior year. And then in June, as we're open now, prices grew further, 3.7%. And we sort of were hearing reaction of some people being quite surprised by that, but equally being very positively encouraged by that. Particularly retailers who remembered what happened in the financial crisis when prices were called down, balance sheets were written down, and a lot of money was lost. And then we had a bounce back the following year, which annoyed, I think, and frustrated quite a few retailers. But the big surprise was for many of those people that in July, we didn't see sort of a curve back downwards. We saw a continuing level of growth of pricing up to 4.6%. And into August, it hasn't changed either. We're still seeing strengthening pricing of around 5.8% for the first week. And I think now the last week we were at 6.6%. So the long and short of it is that demand is still very strong. Supply has been somewhat constrained. The consumer is looking for cars. There aren't quite enough out there. And actually, we're not being flooded, as people perhaps feared, with excess supply. And pricing is extremely robust. And so long as we're talking about facts and hard data, there's no reason to predict that it's necessarily going to go zooming the other way in the very short term either.
Yeah, yeah. I mean, there were quite a few people saying that August is going to be the month where values are going to soften. We're going to have to expect this. But like you're saying there, there's no reason to suggest that. I mean, if you do put your finger in the air a little bit, I mean, is it inevitable that prices are going to come down in the next few months, especially as we get to the latter part of the year?
Well, I think it all depends, doesn't it, on the balance between demand and supply. Mm-hmm. So if we firstly deal with demand, for the reasons we've talked about already, demand looks robust right now, well ahead of prior year, both in new cars and used cars. There are factors that lead us to believe that there's positivity still in the market with new people coming to market. If you take the public transport fleers, plus those who are adding a car to their households, you've got roughly 24% of people on our site today who are saying they're looking for an additional car. So there's quite a chunk of people who are actually not just renewing a car, part exchanging and so on. That's a very strong source of optimism, I'd suggest, in terms of demand. Just one factor. I think the supply point is equally something that we're, I think, learning from as we go. But what is great is that the actors in the remarketing environment are learning. They're not flooding the market with returning vehicles. In many cases, they haven't had the sort of fluidity of the system to do that in any case. The road haulage system has been slowed down. Not everyone's back from furlough even now. Auctions have only really worked digitally, although very effectively so now. And the likes of the rental companies haven't been flooding the market with lots of end of cycle vehicles because they're not buying new ones, partly because clearly the rental companies are suffering a lack of tourism interest and so on, but also partly because the manufacturers aren't putting cars into the channels like rental and other short cycle business because they're prioritizing the stock that they've got into their most favorable channels and the ones that help the retailers most because they'll be conscious of trying to support them. So that all of that combined means that you've had a good level of sort of responsible behavior in terms of supply. And equally, if you're remarketing today, you're seeing the opportunity to sell smartly the cars that you've got in a sort of reasonably well-managed way at very high prices. So why wouldn't you? Without flooding the market, it makes a lot of sense. So long as the demand and supply stay in good shape, even if supply increases a little bit in the next months, if demand doesn't drop off radically, then we're pretty confident that there won't be a huge correction coming our way in Q4.
Yeah. And what about the new car market in terms of that? I mean, there are some things to consider, like cafe regulations, there's OEM expectations on retailers. What do you think the picture's shaping up to be like?
Well, I think there is an element of, I think, growing angst within retailers that the OEMs are starting to sort of re-exert the usual pressures on performance and so on. That is going to be a challenge as the retailers are still grappling with the issues of end of furlough, of restructuring that we know is going on in many cases and so on. I'm confident, though, that with the growing levels of supply that manufacturers will have, I think there will be a coming together of minds where retailers know ultimately that those who are selling new cars, it's in their interest to be selling as many new cars as they can, so long as there's not an overheating. So if you're being encouraged to sell more new cars because there's good supply and the offers are strong, and the offers already are strong, and I'm pretty confident the supply will get better, that's only a good thing from a retailer point of view. You're creating a positive cycle, bringing in part exchanges, bringing in more customers to your after sales park and so on. So I think that will be a source of optimism, I'd suggest, more than anything else. But we will no doubt have a few bumps on the road. The key challenge for the manufacturers is making sure that they keep their retailers fully on board with that strategy, and they're able to work smartly together to create the sort of seamless consumer journey that car buyers are really looking for.
Yeah, yeah. Fantastic, Ian. I think we're going to have to leave it there for today, but you provide some fascinating insight there. So thank you very much indeed. Always a pleasure to have you on. Thank you.
Perfect. Thank you, James.
And that's it for today's Car Dealer Live. If you want to be in touch, then please do email me, james.batchelor@blackpoolmedia.co.uk. But until next time, thank you very much indeed, and bye-bye.